Welcome to the Deep Dive. Today, we're going to be taking a deep dive into Happiest Minds Technologies.
Happiest Minds.
Yeah, and we're going to be looking at their second quarter results for fiscal year 2025.
Okay.
And we've got kind of a treasure trove of information to dig through. We've got investor presentations, press releases, and the raw numbers from their financial statements.
Yeah.
So we're going to uncover the story behind Happiest Minds' recent performance, understand what's fueling their growth, and explore what the future holds for this intriguing company.
Yeah, you know what I find really interesting about Happiest Minds is how they've managed to carve out a significant space for themselves in the IT world in such a short amount of time.
Right.
I mean, founded in 2011 and going public in 2020.
Wow.
They're still relatively young,
Yeah.
yet they're already working with 82 Fortune 2000 Forbes 200 companies.
Huh.
That tells me they're doing something right
Yeah.
in this fast-paced digital landscape.
For sure. It definitely makes you wonder, what is their secret sauce?
Right.
I mean, they're not just surviving, they're thriving.
Exactly.
Their revenue for Q2 FY25 reached a remarkable 52,164 lakhs. That's a 28.3% jump compared to the same period last year.
Okay.
In US dollars, that's $62,385,000, showing a 27% growth year on year.
Wow.
And get this, they've even launched a dedicated business unit for generative AI.
Oh, wow.
Talk about being ahead of the curve.
Yeah, that's right. This born digital, born agile approach is woven into their DNA.
Okay.
A whopping 97.3% of their revenue comes from digital services. And their agile model is implemented in 95% of their operations.
Rightly.
It's clear that they're laser-focused on adapting to the demands of the digital age.
Yeah, but it's not all about the tech.
Right.
Their mission statement, happiest people, happiest customers, caught my eye. It's just a commitment to company culture that goes beyond just delivering projects.
For sure. It's more than just words, though. Their impressive 3.9 rating on Glassdoor and consistent recognition as a great place to work back that up.
Yeah.
That kind of positive employee sentiment
Right.
is rare in the often demanding world of IT.
Yeah.
And it speaks volumes about their work environment.
All right, so let's unpack some of these impressive project wins they've secured.
Okay.
We're talking about diverse projects.
Wow.
Building an AML data platform for a European Health Research Institute.
Right.
Designing a learning platform for an Australian healthcare training provider. And even implementing their award-winning Artha platform for core banking and buy now, pay later modules in Africa.
Oh, wow.
It's remarkable how they're securing deals across the globe,
Yeah.
from the Americas to Europe and the Asia-Pacific region.
Their global reach is certainly impressive.
Yeah.
It's also worth noting their recent acquisitions of Pure Software Technologies and Aureus Tech Systems.
Interesting.
These strategic moves suggest a deliberate effort to expand their capabilities and accelerate their growth trajectory.
Okay, speaking of growth, let's dive into those financial figures a bit.
Right.
Their EBITDA, which for our listeners who might not be financial gurus, stands for earnings before interest, taxes, depreciation, and amortization,
Right.
hit 11,882 lakhs for Q2 FY25.
Right.
That's a healthy 13.4% increase year on year.
Okay.
It seems like those investments in new initiatives and the integration of their recent acquisitions are paying off.
Absolutely. But it's important to note that while their EBITDA and revenue are up, their profit after tax, or PAT, has actually decreased by 15.3% year on year.
Okay.
It's not uncommon to see some fluctuations in profitability as companies invest in growth,
Right.
but it's definitely something we need to explore further.
Yeah, that's a great point. I'm curious to understand what factors are contributing to that decline in PAT.
Okay.
And on that note, what about their commitment to high free cash flow conversion?
Okay.
Is that still a key focus for Happiest Minds?
It certainly seems to be.
Oh.
Maintaining a strong free cash flow is crucial, especially when you consider their recent acquisitions and the debt they've taken on to fund them.
So it seems like there's a bit of a balancing act at play here.
Yeah.
Happiest Minds is clearly in a growth phase, making strategic acquisitions and investing in new ventures.
Right.
But at the same time, they're facing challenges with declining PAT and a potential increase in debt. I'm keen to dig deeper into these financial dynamics and see what it all means for their future prospects.
And let's not forget about their SMILES values. Sharing, mindful, integrity, learning, excellence, and social responsibility. It's intriguing to see how these values might be playing a role in their success.
Right.
Particularly with that remarkable 95% repeat business they boast.
Yeah.
Could their focus on mindfulness and social responsibility be a key differentiator
Yeah.
in attracting and retaining both clients and employees? It's definitely something worth exploring.
For sure.
Yeah, that 95% repeat business figure is definitely remarkable.
Yeah.
It suggests a high level of customer satisfaction and loyalty, which is no small feat in the competitive IT services industry.
Right.
Perhaps their mindful IT approach and emphasis on smiles values create a unique client experience that sets them apart.
Yeah.
It would be interesting to delve deeper into their client relationships and understand what drives this exceptional loyalty.
For sure. Speaking of financial health, let's zoom in on some of those operational and financial metrics.
Okay.
Their debt-to-equity ratio jumped from 0.35 last quarter to 0.82 this quarter. That's a significant increase, isn't it?
It is. It indicates they've taken on more debt,
Yeah.
most likely to finance those recent acquisitions
Right.
of Pure Software Technologies and Aureus Tech Systems.
Okay.
While they still maintain a healthy debt service coverage ratio at 6.68, their interest service coverage ratio has declined to 3.65.
Okay.
This suggests their ability to comfortably cover interest expenses has decreased.
Yeah.
Something to keep an eye on,
Right.
especially if interest rates continue to rise.
So while taking on debt can be a strategic move to fuel growth, it also introduces a level of financial risk that needs to be carefully managed.
Yeah.
It makes their continued commitment to high free cash flow conversion even more critical.
Absolutely.
Yeah.
That strong free cash flow provides them with the flexibility to invest in future growth, service their debt, and potentially even reward shareholders with dividends.
Okay.
Speaking of which, they just declared an interim dividend of 2.50 per share for FY25,
Wow.
which should be welcome news for investors.
Let's shift gears a bit and talk about their workforce.
Okay.
Despite the constant war for talent in the IT industry,
Right.
Happiest Minds has managed to maintain a relatively low voluntary attrition rate of 14.4%.
That's pretty good.
That's impressive considering how competitive the market is.
Yeah.
And they're doing all of this while maintaining a diverse workforce with 27.6% gender diversity.
Okay.
It seems like their efforts to create a positive and inclusive work environment are paying off.
Their high Glassdoor rating and consistent recognition as a great place to work definitely support that. Attracting and retaining top talent is essential for any company,
Yeah.
especially in a knowledge-driven industry like IT.
Right.
It seems like Happiest Minds has found a winning formula.
Okay, let's unpack their revenue mix a bit.
Right.
It seems like the majority of their revenue,
Okay.
78.3% to be precise, comes from the time and material model,
Okay.
while the fixed price model accounts for the remaining 21.7%.
Right.
What insights can we glean from this breakdown?
Well, the dominance of the time and material model suggests that Happiest Minds is engaging in projects that require flexibility and collaboration,
Yeah.
allowing them to adapt to evolving client needs and deliver customized solutions.
Okay.
This approach likely fosters stronger client relationships and allows them to command a premium for their services.
Interesting. Now, what about their offshore on-site mix?
Okay.
The fact that 88.6% of their employees are based offshore indicates a strategic focus on leveraging global talent pools to deliver cost-effective solutions.
But they also maintain a strategic onshore presence,
Okay.
with 11.4% of employees based on-site.
Right.
This dual approach allows them to cater to diverse client needs, offering both cost-effective solutions through their offshore teams and localized support through their onshore presence.
Yeah.
It's a smart strategy that balances global reach with local expertise.
Looking ahead, Happiest Minds hasn't issued any specific guidance for FY25 based on these Q2 results.
Okay.
But their performance so far, coupled with the positive recognition they're receiving from industry analysts, suggests a positive outlook.
Yeah.
What are your thoughts on their future prospects?
I'm cautiously optimistic.
Okay.
Their proactive steps to capitalize on emerging technologies like generative AI and their focus on key growth areas like digital transformation and cloud services position them well for continued success.
Right.
However, we can't ignore the potential headwinds.
Right. Those macroeconomic factors we touched upon earlier, the increased debt burden from their acquisitions and the ever-present competition in the IT services industry are all factors that could impact their future performance.
Exactly. Navigating these challenges will require agility, innovation, and a continued focus on delivering exceptional client experiences.
So we've covered a lot of ground here exploring Happiest Minds' financial performance, their strategic initiatives, and their unique approach to business.
Yeah.
But let's bring it back to our listener.
Okay.
Why should someone tuning into this deep dive care about Happiest Minds Q2 FY25 performance? What's the takeaway for them?
Well, whether you're an investor, a potential client,
Right.
or simply someone intrigued by the dynamics of the IT industry, there are valuable insights to be gleaned from Happiest Minds' story.
For investors, these results offer a glimpse into the company's financial health, their growth trajectory, and the potential risks they face.
Right.
It's a mixed bag,
Yep.
with strong revenue growth and strategic acquisitions offset by declining profitability and a rising debt burden.
Uh-huh.
A thorough analysis is crucial before making any investment decisions.
Absolutely.
Ah.
For potential clients,
Yeah.
Happiest Minds' diverse portfolio and track record of successful projects across various industries could signal a reliable partner for their own digital transformation journeys.
Okay.
Their commitment to mindful IT and Smiles values might resonate with clients seeking an ethical and responsible IT partner.
And for anyone fascinated by the evolution of the IT industry,
Right.
Happiest Minds exemplifies the kind of agility, adaptability, and client centricity needed to thrive in a world of constant technological advancement and disruption.
Their journey is a reminder that success in the IT world isn't just about technical prowess.
Yeah.
It's about building a culture of excellence, fostering strong client relationships, and embracing a mindful approach to technology and its impact on the world.
Okay, as we wrap up this deep dive into Happiest Minds Q2 FY25 performance, I'd like to leave our listener with a thought-provoking question to ponder. How might Happiest Minds focus on mindful IT and their Smiles values, contribute to their long-term success, and differentiate them in an increasingly competitive market?
Yeah, it really is a question worth considering. In a world where technology is advancing at such an unprecedented pace,
Yeah.
it's refreshing to see a company like Happiest Minds prioritizing mindfulness and ethical considerations alongside technical excellence.
I think it's a smart move both from a business perspective and a societal one.
Right.
Clients are becoming increasingly discerning, looking for partners who align with their own values.
Right.
And employees, especially in the tech sector, are seeking workplaces that offer more than just a paycheck.
Yeah.
They want to feel like they're contributing to something meaningful.
So could Happiest Minds focus on mindful IT and Smiles values actually be a competitive advantage?
It certainly has that potential.
Yeah.
It differentiates them in a crowded market
Right.
and positions them as a leader in the evolving landscape of ethical and responsible technology. It's fascinating to see how these values seem to be woven into every aspect of their business, from their client relationships to their employee culture.
It's not just a marketing ploy. It's a genuine commitment that seems to be resonating with both clients and employees.
Well, we've explored Happiest Minds Q2 FY25 performance from every angle. Their financial health strategic moves, their unique approach to business, and the potential impact of their values on their long-term success.
Right.
What's the final takeaway you want to leave our listener with?
Happiest Minds is definitely a company to watch. They're proving that it's possible to achieve financial success while prioritizing ethical considerations and building a culture of happiness. Their journey is a testament to the power of agility, innovation, and a mindful approach to business in a world that's constantly evolving.
That's a great note to end on. Thanks for joining me on this deep dive into Happiest Minds.
It's been a pleasure.
And to our listeners, we hope this deep dive has provided you with valuable insights into Happiest Minds Technologies and the broader trends shaping the IT industry. Remember, the world of business is dynamic, and staying informed is key.
Keep learning, keep exploring, and keep diving deep. You never know what insights you might uncover.